We're about half an hour away from Microsoft and Google's Q1 earnings calls and earnings results. Really exciting. We're going to learn how Q1 went for tech. Pretty much these two companies will tell the story. If Q1 was more of a recession environment or maybe a growth environment, you can't really tell until you see those business results. Are you guys ready? I got that quarterly earnings buzz. 15 minutes. Let's go. Get your pre-market, post-market trading ready. Get your E-Trades, get your Robinhoods, get ready to whip it out. I mean, so my basic read is that Google's trading at like 15 times earnings, right? Even less than that, because they're poorly positioned. Microsoft's trading at twice the multiple. So even though Google has more cash flow than Microsoft, look at the difference in enterprise value. Microsoft's $2 trillion, Google's $1.2 trillion. Even though Google makes more money than Microsoft, right? Problem is Google's levered to one thing and one thing only, and that thing's going away. We're not going to be searching using Google anymore, as I showed you with the example of the presidents. I wonder if they're both shorts.
Office facilities. And then with respect...
All right, I'm going to make some predictions, but you have to understand before I make the predictions that I have zero confidence. Okay. Conviction, scale of 1 to 10. My conviction here is a 3, which is very low. So I don't really have any faith in these estimates. That's the problem with like, say, Jim Cramer, right, is, and I love Cramer. I used to work for him. I think he's one of the smartest people I've ever met. The problem is that if you make predictions for a living, your predictions will tend to be around 50-50 accurate. And people will focus on the wrong predictions a lot more than the right ones. So it's really, really hard to actually make predictions for a living. And if you do it the right way, you got to give your conviction, you got to give your exact estimates, all kinds of stuff like that. There's a lot of nuance, standard deviation, things like that. So here's my prediction. I think Google will come in light and the stock will get hammered tomorrow. I think Microsoft will come in line, but it'll be down a little bit. Part of it is also the outlook. I think there'll be gloomy outlooks. So, that's my guess. But again, it's a random guess. I think some of your guesses are probably just as good. I would open up, if I had more time, like a Google earnings estimate spreadsheet and give a prize to the winner. Maybe we can do that. Maybe I'll do a Google Forms real quick. Would that be fun? Let's see who gets the number exactly right. I'm just going to be refreshing here nonstop. Sometimes if you're quick, you can find the earnings. Have my special news system. This is all press releases as they're coming out. Everyone ready? It's going to be exciting. I used to have this auto refresher just for earnings announcements. Shut up, kitty. These are real trader hours, not little kitty cat hours. Microsoft is out. Microsoft's out. $52.9 billion. Whoa! Monster number. How about Google? All right, so we know my Microsoft prediction's wrong. It was a good Q1 for tech. Really surprising. Super strong quarter for Microsoft. No press release out yet, at least that I have. I'm sure there is one out. Looks like Google's out. 69. Pretty good quarter there for Google. 69.8. A little better than expected. So looks like Q1 was pretty good for tech companies. Not bad at all. Definitely better than expected. Microsoft's up 4%. Google's up 3%. Good numbers. Great numbers, I would say. It looks like the business climate in Q1 was probably better than expected. Oh, we may be getting a cat delivery. Hey, oh hello, Nibbles. Nibbles just got chucked in here. All right, let's read this press release. Yeah. Up 6%. Pretty weak growth there. So that is probably one of the slowest year-over-year growth numbers in Google history, but not as bad as maybe some feared. Let's look at the numbers in more detail. So search came in at 43.59, barely up year over year. YouTube down year over year again. A little better than I thought, but still down year over year for YouTube. Google Network also down year over year. Kind of suspicious that Google Network was down a lot, but search was up a little. So net advertising was flat to down, which, you know, shows you that Google's advertising business continues to be under siege. Still a really rough environment for Google advertising. You know, market share being taken by TikTok and others, including possibly OpenAI. All right, other had a good quarter. So other includes things like subscription revenue and various hardware. So pretty good quarter there. Other, one of the only bright spots in Google's portfolio. And let's look at cloud. Cloud came in a little less than my expectation. So I lowered my estimate from 40% growth in cloud to 30%, and they still couldn't beat that. So really not great cloud number there from Google. Other bets basically continues to be a waste of time for Google. Very little going on FX side. Looks like they were not able to shrink their workforce despite a massive layoff. So really not a great look there on the efficiency side. It'd be important to hear what their tone is for the outlook. But again, you know, very kind of like bloated cost structure here. Let's look at their earnings. You can see their earnings dropped quite a bit year over year. Let's see if part of that was this, one-time expense. So earnings probably flat year over year, net of that one-time expense. Adjusted the useful life of our servers from 4 to 6 years. That's an accounting trick. It's a shenanigan. It spreads the depreciation over more times. I don't like to see that. I don't see a world where server life is getting longer either. That sort of doesn't comport with reality to me. But yeah, so sum and substance, Google revenue growth still anemic despite the growth in cloud. I think people are celebrating that it wasn't as bad as it could have been. But still not great. And you see very little cost control here. So R&D, 11,468. Maybe some of this includes severance. 6533, 3759. So costs rising. This does include a little bit of severance. So net of that severance, maybe that's a better number. Again, the exact earnings number, a little inscrutable given all these changes. But regardless, the revenue side, definitely a breath of relief for a lot of Google stockholders. This could have been a lot worse. Stock's kind of ostensibly cheap at around 13, 14 times earnings. So not, the disaster it could have been. The market, when the market's giving you that kind of multiple. So a big sigh of relief for Google stockholders. Their business isn't quite dead yet, which the market sort of was pricing in. So a little relief rally for Google, up 3 or 4%. Of course, we have Microsoft, which had a nice number. We'll get to those earnings in a second. Again, I think everyone in tech breathing a sigh of relief that the business climate remains robust, or at least I would say remains in line. It's not quite robust, but there's not an obvious recession for technology spending, which I think is a really good sign. Let's see. On the cash flow side, how did Google do? A bit weak, $23.5 billion. Notice the Capex dropped dramatically. Not good news for Nvidia, by the way. So you look at the peak Capex a year ago of $9.8 billion, and now you're looking at $6.3 billion Capex. They haven't had that low Capex for a while. So Google may be paring back its purchases of servers. Unclear what it means. We'll maybe look for some of that on the conference call. Continuing to repurchase a ton of stock, bought back $15 billion of stock. Determine if that's a wise move later, I guess. all in all, pretty solid quarter relative to expectations. Expectations being very low, but not a great quarter in terms of the absolutes. Kind of thinking about is this a business that's going to get it together? You have YouTube shrinking, ads shrinking. The only bright spot is cloud, and cloud's not growing that great. And if you think about how well Google Cloud's positioned vis-a-vis AWS and Azure, it's not great. AWS releasing a bunch of interesting tools, and Google kind of not keeping up great with that. So let's look at Microsoft. Bit of a different story. Really good numbers for Microsoft. Quite a bit better than expected. Consensus was at 51, and they came in at 53. So really big beat. And you can see on a constant currency basis, Microsoft growing 10%, right, relative to Google's 6%. So Microsoft, and Google, both very large tech companies. Microsoft a little bit more exposed to enterprise than Google. And maybe that's the reason they've grown. But Microsoft also facing a lot of headwinds in a couple of businesses. So really impressive. Let's take a look here. So revenue from productivity and business process, 17.5 versus 17, well above guidance there. Cloud 22.1, just a little bit above guidance there. And more personal computing actually was the big winner here, where we thought that business was falling off a cliff, and it did a lot better. So if you're Microsoft, this isn't that encouraging, right? Cloud is a little bit better than you thought, 19% constant currency, not that great. Productivity, a bit better than expected as well. So Office and Dynamics, doing well. But the real surprise in Microsoft was actually the PC division, more personal computing, where Windows and search, of all things, did better than expected. So maybe Bing actually having that kind of benefit, but it really looks like maybe a one-timer or something like that. So Microsoft maybe not as impressive as it looks on its face, possibly not that great. But given the beat in Microsoft all came from personal, I would actually, I'll make the call now. I would actually short Microsoft right here, 287.05. So I'll put that down. Just a quick trade. Short Microsoft, 287.05. It's 4:13 p.m. Again, love the company. This is just a financial trade. No offense to anyone at Microsoft. I'd say conviction is 5 out of 10. And you can see, again, the revenue was really good. So this prediction is completely wrong. I'll color it in red. It was a really good quarter, which is good news for all of us, right? I mean, we don't want the earnings of the two biggest companies in our economy to be bad, do we? So I'm glad that Microsoft and Google both did all right. Better than that than them falling apart. Moving on, I maybe didn't get the right price there, so I'm going to put the current price, which is 288.01. Is that acceptable? Okay, so that's the price for Microsoft. I don't think that'll last. I think that's a little bit of a euphoric reaction that won't last. Let's see, where's Google? Google's up 4%. I don't think Google is worth the trade. I think Microsoft's only worth the trade because the PC business beating is not really good news for Microsoft. That's really not going to be what drives their business in the future. So they beat that number by like $1 billion. They need to beat in cloud. They need to beat in productivity. They did beat in productivity a little bit, but that's kind of where they need to be, not in the Windows OEM business, which is kind of just generally going to disappear over time. So I really don't think Microsoft will stay this strong. So just a quick trade idea, not a, jumping up and down, you have to do this now thing, but just kind of thinking maybe it might come down a little bit. It's not like some home run trade. I think maybe you can get the stock to go back down to, I don't know, let's see. Something like that. I think, depending on their commentary, this seems like could be a good short. again, quick trade, nothing earth-shattering there. Just not that great of a quarter. But let's keep going through the numbers. Azure, 27%, pretty solid. But again, kind of expected in a lot of ways. Cloud, 25%. It's weird how they define cloud and Azure is slightly different. All right, let's plug in some numbers here. So product, and service. Okay. All right, so pretty solid quarter, I'd say, for Microsoft. Definitely, again, a breath of fresh air for anyone holding their breath. But the problem with Microsoft is their stock is at almost 30 times earnings, 25 times earnings. It's very, very expensive relative to their growth, which is fairly small. 10% revenue growth is still, quite a bit for such a large company. But again, the beat here is mostly coming from their business that nobody cares about. So I'm a little suspicious of the stock price increase. Again, nice quarter for both companies. I'm happy to see, that American business had a good quarter in Q1, right? Every NASDAQ company can kind of breathe a little sigh of relief because it's like the old saying, as GM goes, the whole country goes, or what's good for GM is good for the country. Well, that saying is a little dated. So really what's good for Google and Microsoft is good for America. So glad to see both companies kind of, Google, the catastrophe is not quite here yet. And for Microsoft, business is a little bit better than we thought across the board. But especially in the Windows business, which really is not something I think most investors are that focused on. So, really not much of a success there. And given their trailing 12 months cash flow is about $60 billion for Microsoft. So again, about 34 times earnings on a TTM. I understand TTM is TTM not for 12 months, but not a cheap stock compared to Google at 13 times earnings or something like that. Of course, Google, not very diversified company. Microsoft, extremely diversified. Google facing huge threat from OpenAI. Microsoft is partnered with OpenAI, basically owns OpenAI. Google seems to have kind of not so great management and flubbing product launches. Microsoft executing, firing on all cylinders. That's why, even though Google has more cash flow than Microsoft, Google's worth less than Microsoft, which is really wild. But, that's the way the market is right now. Again, I don't have any really strong opinion. Google, to me, would be a value trap. Google seems really attractive at this price if you can wipe OpenAI away from your mind, which is impossible to do at the moment. Google would be an extremely good value if you can ignore executing on AI, which you can't do, especially while Sundar is still in charge. So to me, Google has to deliver on an AI product in a big way. And they haven't done that with Bard. So in the next quarter or two, Google has to saddle up and really deliver with a big product launch. And I think that Microsoft just has gotten that edge and may have that edge kind of permanently. And again, we still could see a dark horse in AI. By no means is the story done, right? You have companies like Character AI on the product side that look really good. You've got Amazon waiting in the wings, trying to develop platforms. You have all kinds of platform companies trying to supply tooling and infrastructure, things like Hugging Face that are out there for AI, a lot of which isn't happening without Google, quite frankly. So probably going to see an open source LLM pretty soon, and that'll change the game a bit as well. So Google does not look well positioned in this new future of AI by any means. They really fumbled the bag. And, it's unclear that you have any benefit. I mean, again, with Google, you have advertising revenue down year over year. Hard to see that turn around. Even arguably hard to see them maintain that. So really bleak outlook for Google, but again, decent quarter, so the stock rallies. But I wonder if it'll be enough. Cloud sort of looked okay, and the declines in some of the declining businesses at Google are a little bit better than maybe we thought they would be declining. So I don't know. It's a tough call. This will be one for the history books, whether Google can turn themselves around and figure a way out. Typically, again, nothing against the CEO of Google personally or anything like that, but typically what ends up happening in these situations where there's been a fumbling of the bag, there's typically a fairly clear reason to find a new manager. That's typically the tradition. Bring in somebody else. You've had a CEO there for 8 years. It's probably time to give somebody else a chance, somebody else, fresh set of eyes, fresh set of ears, to go ahead and take over. Let's look at deferred revenue for Microsoft. Really important number. Deferred revenue is one of the most important things to pay attention to a software company. And we see deferred revenue not looking great here. But let's see if we look at it on a year-over-year basis. A little better when you look at it that way. But I would argue not a great deferred revenue number for Microsoft. Deferred revenue is like the opposite of accounts receivable. So this is cash you've been paid, but you haven't delivered the product yet. So sometimes it's called remaining performance obligation. But not a good deferred revenue number for Microsoft. Makes me wonder if, again, that stock price reaction on the headlines may be off. Could be wrong, often am, but something to consider there as we fill out the rest of the results. Okay, just missing one or two little things here. All right, so yeah, I think we'll have to hear the tone on the call, right? We still, on its face, Q1 was a good quarter for tech. Of course, we don't have Amazon's numbers or Apple's numbers yet, but for half the biggest tech companies have reported as of now, and Q1 didn't seem so bad. So that's good news for tech. But again, the devil's in the details. We'll have to see how April, which is mostly done, how April went. We want to hear from Google what kind of cadence, product release cadence we should see. We know they're training the largest LLM of all time. So we'll kind of see if that will be something neat or another fumbling of the bag, as we've been saying all day. Make sure you try out my new app, Dr. GUPTA, 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏, 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏, 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏. Ask it anything you want related to medical questions, medical information, etc. It's a really great tool. I made it myself with my fantastic engineering team, but I wrote most of the core logic of Dr. GUPTA myself in JavaScript. Of course, my team refactored it into TypeScript, but regardless of that, that's Dr. GUPTA. Yeah, we're adding a bunch of new features. Stay tuned for those over the next few days. Some really neat features that'll blow your mind, I hope. I don't think we get guidance from anyone other than Microsoft, right? Google doesn't really give quarterly guidance. So Microsoft quarterly guidance will be really important, but my guess is they'll be conservative and the stock will drop, but we'll see. But yeah, really big beat from Microsoft. But again, most of that beat coming from PC division, which not very good. You want the beat to come from cloud, right? I don't know if Google absolutely nailed earnings. That's not the way I would put it. Their earnings are holding up, maybe. Not falling apart as fast as people thought it would. I don't know about. I think they've got a ways to go before. Cool. Well, that was really interesting. We listened to Google and Microsoft's earnings calls. Please try out 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏. It's a large language model for medical information and healthcare information. So for Microsoft and Google, I mean, obviously these were good numbers. In a lot of ways, there was sigh of relief for both companies that were sort of cautiously awaiting potential recession.
and some poor environment we saw in Q4, that doesn't seem to have panned out into Q1. Things have gotten maybe even a little bit better, so that's really great. But both companies have their relative strengths and weaknesses that they have to deal with. Microsoft gave good guidance for next quarter. It was a little better than consensus, which may seem like a very small change to have a 10% move, but that's just sort of the nature of tech stocks. Very small directional changes are really big and important for stock prices. Making an elephant dance is kind of what Microsoft has to do. It's very hard to grow such a big company, and they're doing a great job of it. Google, on the other hand, also had relatively good news. Not so much that they're growing or getting out of their slump. They're still in their slump, and it wasn't clear that they really had much to say. They were really quiet on the AI side. They didn't really explain that they had a product that was going to work. So pretty scary from Google. But the current business is doing okay, which I think a lot of people thought they'd start to be falling off a cliff, and they're not. So, of course, Google has to figure their AI positioning out. So the market's a little overreacting to both Microsoft's relative strength and Google's relative weakness in AI. Truth be told, Microsoft's probably a little too expensive, and Google's probably a little too cheap. But then again, we have to see how the next few years play out. That's sort of assuming Microsoft can't keep dominance in AI via OpenAI, and that's also assuming that Google won't fall apart. So we don't know what will actually happen. If Google falls apart in AI, it's a short. There's no doubt that LLMs are superior to Google search. So Google has to figure it out, and fast. Microsoft, on the other hand, if they can somehow keep AI dominance, maybe they'll grow into this valuation. But it does seem very extended and expensive to me. I would not be chasing Microsoft at $300. Anyway, that was fun. Thank you guys so much for supporting and coming to the stream. We'll try to do some more earnings season streams. It's earnings season in corporate America. We'll look at what's on the schedule for tomorrow and for Wednesday and Thursday, and it'll be really interesting to see what's coming out, like Amazon and so forth. It's obviously Wednesday and Thursday, tomorrow and the day after.